Welcome back, everyone, to the Affordable Homeownership Roundtable. We do this every couple of weeks. If you've tuned in before, you are probably looking and saying, hey, that doesn't look like the guy that usually leads this thing. Our fearless leader, Scott Shang, is in Chicago this week for an influential writers retreat. So working on some important things and helping us bring this message across in different ways. What we are talking about today is new credit tools that help renters become homeowners. You know that we're here with Phil Bracken of America's Homeowner Alliance and Brian View of FinLocker. The whole purpose of what we talk about here every couple of weeks is things that homeowners, potential homeowners, need to be aware of behind the scenes that are impacting home prices, ability to borrow, important and critical decisions that are being made in Washington, D.C. on the state level and in other places that impact your ability to buy a home and build wealth through home ownership. So today's discussion is an important one. A few weeks back, Fannie Mae came back and made an announcement that they are going to integrate into Desktop Underwriter, their automated underwriting system, the ability to utilize rental history, so your history of paying your monthly rent on time, as another factor to make it more likely that you would get approved for a home loan. So we're going to go into the details on that. We're going to talk about other methods for increasing your credit score by bringing in things that are not captured by the credit scoring model. And then we're going to kind of wrap up with a discussion of the tool FinLocker, Brian's company, what they represent, and how that can help you as you're preparing and planning to become a homeowner, both in terms of improving the credit scores, but every step through the process. So with it, let's start with what an automated underwriting system is. So Fannie Mae and Freddie Mac each have their own. Fannie Mae is who's made this announcement that they'll use the rental history. Basically, it's an algorithm that looks at the data that it can see and it makes a decision. Is this borrower creditworthy or not? And it has been given the authority to kind of go above and beyond the guidelines that were in writing. You go back to the mid-90s before we had automated underwriting, the rules were much more hard and fast, and it was very difficult to exceed them. So within constraints, the automated underwriting model covers some of that for us and lets us go beyond it. So what's important to know is that it can only see the data that it's presented. So it's presented the loan application, which your loan originator and your loan processor and you collaboratively provide all the information. So it says, what's your social? What's your date of birth? How long have you lived where you're at? How much do you pay in rent? How much income do you earn? It can also see third-party information. The biggest and most obvious one that we've always utilized is your credit report. So the credit report is attached and it is viewed by the algorithm, and it reads your entire credit history as it's captured by that credit report. A few years back, we started to add the ability, some services, some people, their employment history can be pulled there. So we have something called day one certainty, where as we add the ability to not just validate credit, we can validate income and assets with third-party reports. It is possible for that automated underwriting system to give you a final underwriting decision. It doesn't happen very often because people don't have all of those pieces, income, assets, and credit all lined up there. But Brian, why don't you give us an overview of what Fannie Mae is doing, how they're going to look at rental history, and how they are planning to use this to help more renters and become homeowners by approving files that previously probably couldn't have been approved.
Yeah, thanks, Josh. And that's you hit it on the head. The objective with this guideline change that was approved by FHFA, which is the governing regulatory body that oversees Fannie Mae and Freddie Mac and others. The objective here was to be able to expand and approve more consumers for mortgages, right? So thus improving home ownership rates. There's a lot of details behind it. So first of all, this is a little bit inside baseball for consumers who are watching, but it helps you understand the complexity of the process that includes making a credit decision on a mortgage application. Today, when a lender, an originator, a mortgage broker submits a loan application and it's then sent to Fannie Mae's desktop underwriter system, the automated underwriting engine. If there's if the feedback on that submission today is a referral or a decline, if you want to call it that, a feedback message will be included to the originator that would advise, in this particular consumer's instance, if you were to include 12 months of asset data, bank data, transactional data from the consumer's bank account, and rerun the submission, Fannie Mae desktop underwriter may be able to approve this consumer. So there's some finite levers inside that algorithm that would pop that message back. And so in practicality, what that means is the lender, the loan officer, then would go back to the consumer, and if they hadn't already created a link, a digital link between the consumer's transactional asset data from their bank accounts with that lender to ingest into the underwriting system, they would begin that process to create that link. FinLocker does that. I can talk about that in a little bit.
Brian, I don't want to interrupt you, but it's important for a consumer to understand it's not as simple as saying, okay, so I've paid my rent by check through my checking account for the last 12 months. Let me give you 12 canceled checks or give you a mortgage statement. It has to go through this validated system of pulling the assets. So why don't you kind of tell us what that looks like, what a consumer has to do, what data it provides the automated underwriting system with, and then how that works.
Yeah, perfect. So again, I'll speak to it in the context of how FinLocker does this, because that's what I know. But there are a few other platforms available to lenders to do this service. So essentially, a loan officer, Josh, you would invite your borrower to create an account, a locker at FinLocker. The consumer in that locker would link their bank accounts that are being used for this mortgage transaction. So let's say they have two bank accounts, checking and savings. They would link those bank accounts through a secure process where we essentially authenticate the identity of that consumer through our security layer. And once that's done, the consumer then selects which accounts they want to link. We serve them up their login link to that particular bank. Consumer logs in. We link the data and bring in the data only. It's a read-only process. There's no transactional ability to make a payment, withdraw monies, move monies around. It's read-only. And essentially, this is not a whole lot different than coming in with 12 months of bank statements. We're just giving you a seamless way to do it digitally, direct source. But for Fannie Mae, in this case, that process allows, Josh, you to take the data behind those two accounts, 12 months of that data, the most recent 12-month history, all of the transactions from those accounts, and push it back into Desktop Underwriter. And Fannie Mae, through its algorithm, will immediately analyze that data and detect those rent payments, right?
And everyone's familiar with their credit report. They know what it looks like. They've seen one. So to the automated underwriting system, it doesn't see the report in the same way. We plug in the report number, and then that's all just data that comes in. And in essence, what this system does, it does the same thing with your bank account. We get a report number, we plug that in, and it pulls all of the data, and now the algorithm can read it. And you said something that's really important, that you are not authorizing someone to have access to your bank account. No. You're authorizing them to pull the data out and put it and create this report that is necessary. Like the thing that I compare it to, this that fear of security of handing over access to their bank account is what's really limiting adoption of this. I mean, it probably happens on less than 1% of files right now. So this is great that Fannie Mae is making this an option, but in reality, very few people make use of it. And what I compare it to is, I don't know about you, but remember in the 1990s, late 90s, when we first started getting websites that you could shop from, and people were like, well, I'm not putting my credit card in there. Who knows? This could be a Russian bot, and it could be stealing all my information. People have that same fear, but there's 2 or 3 major secure aggregators that facilitate this, and it's a proven and secure process. Most people know that if you go do your taxes in TurboTax, you can authorize your bank account and they can make that deposit for you. This is more secure than that. You're not authorizing to make a deposit. You're just wanting to pull that information out from there. So
yeah, here's one way I explain it. And, imagine instead, Josh, that you ask your borrower to give you 12 months of bank statements. So they hand you a stack of paper. There's a lot of information on that paper beyond the transactional data. And you take the paper and you go and get in your convertible and you set the stack of paper on the passenger seat and start zipping down the freeway, and there's pages upon pages, right? That's a dramatic example, but that's, to me, there's not much difference than to what we're doing here.
I'm offended that you think I would drive a convertible. First of all, that's my biggest issue.
I'd love to see your big head sticking out of your F-150 or F-250.
That we're getting better. So, like, the thing that I say is, 20 years from now, it's just going to be the way that it's done. The security is there now. The people portion of it, being comfortable and being willing to do it, is just not there. And I speak from that. We use multiple different tools that offer that option, and it is a pain in the butt to go over to Chase Bank or B of A and download 2 or 3 months of PDFs from your 3 or 4 different accounts over there. So like, to me, it's a no-brainer that you would just authorize this. You've done it other places. We've all done it other places. When you set up your Venmo account, you authorize through the same mechanism to do that. But when it comes to your mortgage, we have people just dig in their heels and say they're not going to do it. So from this perspective, kind of back to the point of what we're talking about today, there's information transactionally in those statements that when you can get a long enough history of it, which you're most likely not going to provide 12 or 24 months of statements,
right?
But the authorization allows that to happen. So from that perspective, this is the future of the way it's going to be done. You flash forward, I don't know if it's 5 years, 10 years, 20 years, this is absolutely how people are going to do this.
Without question.
So hopefully it happens sooner rather than later, because it's great that Fannie is saying, hey, we can do this, but you get to the point of, how often is it going to happen? How possible is it? And in the future, it's going to be very possible. Right now, today, less. I'm not super positive of how many people are going to be impacted in the short run, but the more people we can get to utilize these tools, the more it will happen. Now,
John, let me add just a little piece to that, if you don't mind. By the way, Tino's trying to get in. Josh, if you want to let him in the. Just a couple of quick things. I pray that this process does not have to wait 5 years to be impactful for America. We have nearly 45 million renters in America, and less than 1% of their rent data is reported to the credit bureaus by landlords. So, those people have no benefit from paying their rent on time. This process, and by the way, we've been trying to get Fannie Mae and Freddie Mac and FHA and others to allow this validated, verified method of examining consumers' payments on their rental payments. We've been trying to get this done for 10 years. We finally crossed the goal line. With Fannie Mae allowing this to happen. The point of it is, with nearly 45 million renters in America, and let me just also, this is generic, but it's true, at least 95% of those renters pay their rent on time. So when you think about the magnitude of impact of this data, what is more relevant to determine whether a consumer could make their mortgage payment of whatever it is, $1,800 a month, if they've been paying rent of $1,800 a month for a year or 2 years or 3 years or 4 years? Hardly anything is more valid, more predictive than that. It's as Brian mentioned, lenders and these agencies that buy these mortgages from the lenders in America really can't make a true assessment of a consumer unless they understand their income, assets, obligations, and employment. And part of that income and obligation process is rent payment is, frankly, in many cases, a 3-year lease is just like a 3-year mortgage. It's no different. People are obligated to make the payments, and more than 95% of them do on time. This really will be a extraordinary lift for people if they use it, but they have to be able to use it, and you can't just talk to somebody and get usage. You have to actually get access to this in a verified, validated, transparent way through FinLocker is one of the primary ways to do such a thing. But it's great, and it has big magnitude, and I'm expecting that this will have real impact very soon. If renters want to cross that threshold for home ownership, this is absolutely the way to do it, and they should talk to their lenders about that just immediately. Not 7 months or 20 months from now. Do it right now. Start talking to your lender about, can you get access to my rent data, and submit it, get it ready in a FinLocker or, potentially some other vehicle, but get it ready for me to be able to use, because I pay my rent on time, and it should be one of those real uplifts for me.
Absolutely, Phil. So rental history is the most predictive. So past payment history is the most predictive of future payment history. Your rent is likely your largest payment. I'm sure there's a few people out there with car payments bigger than their rent, but for the vast majority of renters, it's the biggest payment, most analogous to what their mortgage is going to look like. So it's the most predictive. But in addition to that, let's kind of transition the conversation into some additional things that can be done. So where we're talking about this being beneficial, if you have an 800 credit score and you have a 20% debt to income ratio, the automated underwriting system is going to approve you, and it's going to say, you don't even need to look into this person's rental history. I know from what I've seen that they're going to make their payments on time. So where this comes into play is when we get to the gray areas where the algorithm is not saying, hell no, this person can't ever own a home. It's, hey, I need more information. So in addition to being able to provide access to your asset reports and utilizing that data, there are a couple of different methods. Brian, why don't you talk about the TransUnion option for bringing in additional data and boosting the credit score?
Brian, before you do that, Brian, just let me respond to Josh. By the way, Tino's still trying to get in, Josh. But I think Josh just described this correctly. But someday, soon, it shouldn't just be those consumers that are on the edge and need some additional boost to be able to get them across the goal line. There is, again, for every lender in America, getting validated, verified, transparent, and audited information like from FinLocker about rent payments should be just a normal, common thing that people do because everybody that's making an assessment of credit to credit worthiness, this information is extraordinarily valuable for everyone, not just the people on the edge. So I'm hopeful that everybody starts to understand that, especially 45 million renters in America, that there's a way to lift yourself into credit worthiness if you get this access to FinLocker and through your lenders.
So Phil, I like the word lift more than the other word. So alternative credit score boosting strategies, right? There are programs, products out there. We see a lot of mass marketing and media behind a few different programs where people can go and do that. We have FinLocker. We have a relationship with a great company and a great product, eCredible. And eCredible has a product called Lift. And what Lift does, and I think it fits squarely in this population of 45 million renters, because most of those renters, in addition to paying their rent, are also paying some utilities, some form of utilities, water, electric, gas, or all three of those, right? Just depends. Most of them aren't getting credit for making those timely payments on their utilities. And I say getting credit, meaning it's not covered anywhere. It's not
it's not reported to the bureaus, and therefore not
it's not
included
thought of.
Right.
So eCredible, with our partnership, FinLocker and eCredible partnered to create a mechanism for consumers to, again, link utility payments they're already making, and eCredible then provides a pipe to take that data and get it published, posted on the consumer's credit report through TransUnion. So for folks that are either invisible in the credit universe or have light credit, this is a great tool to empower a consumer to leverage their own data, right? This is their data, leverage it to improve or lift them, their credit profile. And in some cases, for an FHA loan in particular, the ability to create a trade line or multiple trade lines could be the difference between getting denied or approved for an FHA loan, because you can do a manual underwrite and use alternative accounts of credit to make that assessment. So, eCredible is a great company. It's a great platform. It's serving those that need the most help in providing tools for them. And I think, to me, the way I look at what eCredible's doing, what FinLocker's doing, there's a few other great platforms that are out there that are kind of thinking the same way. We're all focused on empowering consumers to leverage their data, as opposed to the model typically is they get leveraged by some financial institution who takes advantage of their data. And so we're all about consumer permission, consumer controlled, consumer sharing, and having the ability to retract that sharing, so they control who sees their data for how long and for what permissible use. That's where we're going, guys. We're going to a place very soon where we're all going to be walking around with the ability to apply for financial products. Could be a mortgage, could be an auto loan, could be insurance, by sharing our own consumer permission data.
And it has to be validated and verified anyway. Or you might as well, as long as it's read only and secure and safe, and no one's going to get access to your accounts. They just get the ability to read it and transport it to the decision makers. And we can do that instantaneously.
With eCredible, what they're doing, it's interesting that right now they're sending that information to TransUnion. So if you have, let's say you have 3 low scores, you're in the high 500s and you're trying to get up over 620 to do a Fannie Mae loan, or into the 600s to get a better credit score for FHA, or to just make it more likely that the automated underwriting system approves you, that's only going to help with one bureau. You've all seen that Experian has been, for a couple of years now, they offer something similar, Experian Boost. You can provide them access to additional information, and they'll look at your Netflix bill and some other things and boost that. So at least now we have options with 2 bureaus. So if you have 3 low scores, for us on the mortgage side, we use the middle score. We use the median of your credit scores. So being able to boost 2 of them would get it where it's more likely for you to have a middle score higher, to impact your pricing when we go to lock in the loan, to impact the credit score, the algorithm to likely approve your loan. But I just want to reiterate that one of the things that Brian said is really, really important. What eCredible is doing, when you get them that information and they report it to the bureau, and we have this 12-month history, a lot of the loan programs, primarily FHA, if we're going to do a manual underwrite, if you can't get through the algorithm, we have to do a manual underwrite. We have to build an alternative credit history. We do have to show that you have paid someone on time. And this is a third-party tool that can facilitate and make that easier and make it more likely that you can get that manual approval. So, we tried to keep these calls to about 30 minutes. So as we're winding it down, what I would love, Brian, Phil, for you guys to kind of go through, when I saw the announcement from Fannie Mae that we're going to be able to use rental history, I looked at it and I go, okay, that's great. And bigger picture, longer term, kind of what I was talking about, I think it's going to make an impact. But in the short run, a much bigger impact would be removing FICO's monopoly on the credit scoring model, because we have, I don't even want to run the numbers, but Phil, throw the numbers out there of how many more people would have credit scores, more accurate credit scores and higher credit scores, and therefore be eligible to qualify for better rates and more likely to be approved by the algorithms.
Well, thank you, Josh. The number is 37 million consumers in America that are listed or classified as unscorable because they don't have trade lines or haven't had credit history in the last 6 months or 12 months and haven't utilized credit. Vantage Score can provide a credit score for these people using a lot more machine learning and different methods of gathering the scores. And of those 37 million people, about 13 million of them already would have a score of 620 and up and be reasonably eligible for mortgage finance. That's just one part. The second part is obviously, as you mentioned, we simply have got, it's taken 10 years to get to this point where we got finally one of the government agencies to say, okay, we'll start using this rent data. That's why people should join this America's Homeowner Alliance, because we have been working on this almost daily for 10 years. And if we had 10 times the members that we do in the AHA, I guarantee you we would have shortened that time frame to a year or less. We did the same thing when the government agencies stopped doing 97% financing, 3% down payment. It took us about 2.5 years to get that reversed. This is a great step. This rent documentation information is a great step. But there are so many more things that we could be doing and will be doing if we can just grow the membership to actually take this message to policymakers and make them work on behalf of the consumer to pay their rent on time. The 96 or 7% of them, of the 45 million people, should have been benefited from this for years and years and years. Finally, it's here, but we can do a lot more if we just get a lot more voices weighing in.
And membership is free. You see down here at the bottom of the screen, we have the link myaha.com/join. Join, and it's no cost to you, and add your voice to this conversation as Phil and Tino and Eric and Brian and Scott and I are trying to affect change that's actually going to help you guys going forward. So it's a free link. Click on over there. Join when you have a minute. If any of you guys watching at home have any questions or thoughts or ideas of what we can be working on and talking about, that's really what AHA is about, to build and continue this conversation and move the conversation forward to make it more possible for more renters to become homeowners, homeowners to build more equity, and to be successful through policies that support that.
Yep. Do join. It's no credit card required, no strings attached. We don't sell your information. We don't give it to anybody. We won't bombard you with emails. All we need is your voice to let the guys in Congress know we mean business. Home ownership has got to be protected.
Absolutely. So with that, Phil, Brian, anything you guys have to say before we wrap up today?
Nothing here. Thanks for continuing the mission.
And thank you to Brian for the hard work that FinLocker does to provide this data. Fabulous.
Thank you all.
Okay.
All right. Thank you all. We'll talk soon.
Thanks for tuning in. We'll see you guys again in a couple weeks.